everyone, welcome to Reimagine 2020. I'm one of your hosts, Artur. Today I have with me Alon Goren, the founding partner at Draper Goren Holm, a blockchain venture studio and venture fund. Welcome, Alon.
Thanks for having me. Excited to be here.
Yes, me too. So why don't we just jump in there? Tell me, how are you first introduced to crypto, and what do you do today?
So, crypto, it was weird. It happened sort of two angles for me. So I had a company that basically built technology for crowdfunding. And this was before the word crowdfunding existed. So we called it social fundraising. And the idea for it sort of stemmed out of working at MySpace back in the day and trying to help people use this new tool of social media to do good things like raise money for nonprofits or raise money for your business and things like that. And a few things happened in that space. One, it was illegal at the time to raise money online the way it is right now, the way it is legal right now. So in the United States, the laws changed in the meantime, and we sort of participated in that. And that was one thing that drew me towards crypto in a way, because I felt like it was crazy and unfair and kind of un-American, these rules and laws for fundraising on the internet. And it also, pushed me further towards a borderless world where everyone can transact and do things. And a few years later, after starting that company, we sort of decided to take it full time and get serious about it. One of our first customers for that business was Adam Draper. And Adam Draper launched something called Boost Funder. And Boost Funder, if you're familiar with it today, is an accelerator that focuses on sci-fi companies. And their first few groups of companies were all Bitcoin related. I had no idea what Bitcoin was at the time. But in the 2013 or so timeframe, we started experimenting with crypto at the company, invested in, to see if we could use it for microtransactions and for peer-to-peer lending and peer-to-peer type transactions. We mined some Litecoin and Bitcoin in our office right when Litecoin launched. And back when you can still buy the parts to do some mining effectively on Amazon. And it only lasted about a month. We got in trouble with our landlord because we heated up the whole office and the electricity bill got crazy. Not just from the miner, but from blasting the air conditioning when we weren't there. And so that stopped. And we came to the conclusion in 2013 that it wasn't ready for prime time. We had to focus on our crowdfunding business. And our customers would never use this super overcomplicated thing. And I wish I had gotten more into it at the time, but being totally honest, I didn't. Over the years, that company ultimately failed. But Joseph and I, separate from that company, my partner now, Joseph Holm, created a conference for the crowdfunding space called Crowd Invest Summit. And that conference, over time, evolved as the crowdfunding space evolved. And in 2016, then 2017, and then all of those crazy ICOs were blowing up. And for the first time ever, the crowdfunding space was gaining this crazy popularity, not because of what was going on in crowdfunding, sort of because of the people who circumvented the rules and regulations and started doing ICOs around the world. It was so funny that the year that it shifted, the most sought after speakers at our conference were the securities attorneys. Like the people who everyone was avoiding, who nobody really wanted, I'm sorry to all my friends who are securities attorneys that I love, but nobody wanted to hear from them at a conference. You wouldn't fill the room with 1,000 people to listen to attorneys talk. But this one year, I think it was the 2017 or so time, it blew up. The room was packed with like 1,000 people to listen to what the securities attorneys were going to say about ICOs and crypto and crowdfunding. And by that point, Joseph and I had sort of gone full time into crypto, and I had helped a group start a crypto fund. But my passion always was about early stage startups. So as much as I love Bitcoin and I love Ethereum, I'm not a day trader and I'm not a trader and I'm not looking at the charts and going, oh, that token went up, this token did this token did that. I'm not doing technical analysis. For me, it's like, you know, I look across the table and I see Artur and I go, hey, Artur, do you want to, like, are you starting a company? What are you doing? I want to bet on you. I can't bet on a token that has no face or whatever.
Mm-hmm.
You know, I love the guys behind Lunar Crush because they kind of are putting a face to cryptocurrencies, right? They're putting some data and real analysis behind it that's separate from this technical stuff. And so, you know, I want to bet on the people. So I left that crypto fund because they were doing those token deals. And I started doing the kind of deals that I wanted to do with Joseph, betting on the people, betting on David Blesnak from Total, betting on the guys from Lunar Crush. And that's where we kind of are at today. We built this venture studio where we do deals with companies doing really awesome stuff. Doesn't mean that they don't have tokens, because some of them do, but the idea is to bet on the people long term. We're not buying the tokens to trade them. We're buying the tokens to hold them for the next 10 years, or we're buying equity in a company. And when you invest in startups, you expect, if you're lucky, for it to take 5 to 7 years to get an exit. A lot of times you get no exit. The company fails like mine did back in the day. Or it could take 10 plus years, right? So you never really know. And so that's the kind of bets that we make as a venture studio. And we just actually announced a fund called Draper Goren Holm. Last year, Tim Draper invested in us and we rebranded from Goren Holm to Draper Goren Holm. And we expanded the venture studio and did a lot of very cool things. And so we just announced the fund at our conference earlier this month. Actually, it's just been a few weeks, that we just announced, so that we can double down on companies who are at a later stage, or companies that are in our portfolio that are doing really, really well. So we're really excited about that. That's like a traditional fund. The venture studio, we get scrappy, right? We're entrepreneurs ourselves. So, you know, this, I feel like I look like a crazy person right now because I haven't shaved my beard in like 2 months, but I'm quarantined Corona style, just like everybody else. And I am, you know, coding and helping our portfolio companies just like they're working on their products. And that's sort of what the venture studio does. Like, we have a small team and we just work our butts off just like the companies to help them grow. The fund is meant to double down, and so that we have the cash to invest, because what we realize is we can write small checks and we can help. The helpful part, that's easy for us because that's just what we do. We love early stage startups. We're hackers ourselves. We're sort of marketing and guerrilla marketing experts. But then we get a company to a certain point, we share them with the Draper Venture Network, and then somebody else writes the bigger check to them and gets to own more of the company than us. And we were like, hey, that's not cool. We want to own that. We want to own more of the company. And so that's why we started, why we just raised the fund, or why we announced the fund.
Congratulations on the fund. So one of the things, so actually a lot of things I want to ask about there, but starting off, what is a venture studio? It's a kind of it's a slightly funny sounding word or name.
Yeah, it's a made up thing, to be totally honest. There was a group out here. I think the first time I heard of that term, there was a group out here called Science. That was sort of a venture studio. I think I stole it from them. But you know, there's also a group out here that's like a traditional incubator called Idea Lab, which actually stemmed out of, if they're in Pasadena, they're like the most famous incubator in the world, probably, huge group. And what they did was they incubated companies, which meant, you know, a few people there who were the main people came up with ideas. They hired people to create those ideas, and they sent them off to the real world. That's like, you know, if you or I come up with an idea and we incubate it and send it off. Now, an accelerator is when you come to me with an idea and I'm the first person to write a check. I tell you to come live in my office for the next few months, and I help you accelerate it. I help you get it from 2 people and an idea to, you know, a small team and go out to the real world. It's kind of like incubating somebody else's idea versus incubating your own idea, which was an incubator. Venture studio is kind of just another way of saying both of those things, but maybe combining them. Because we essentially, we had a couple of ideas that were our own ideas that we incubated, but most of the ideas come from people we accelerate, but we didn't want to call it an accelerator because Y Combinator is an accelerator. Techstars is an accelerator, and both of those groups are epic, right? Boost VC is an accelerator, and they kick ass. They're better at what they do than we are at what they do. What we do really well is that same period of time, but we're a little too weird, I think, or maybe even unorganized, or we're too misfits. I don't know what you would call it, right? But like, I can't, like, it would drive me nuts, for example, if I put something on my website and I said, apply for the next cohort. And companies apply, fill it out the docs, and then wait 3 months. And once I get a few hundred companies here, I'll pick the best 10. What happens if the day I put that up, I meet you and you have an epic idea? I'm supposed to wait 3 months to work with you and talk to you, and I can't do that. So and what happens after those 3 months pass when we're working together? I just push you out the door and bring in the next cohort. Like, that's not me. Like, for me, it like needs to be like a family thing. Like, we're working together, we're going to be in the trenches. It might take 3 months for you to sail out the door and be on your own, and then I just, you know, do normal catch-ups with you. But it might also take a year, or it might never really end, you know. Like, there are companies of ours that we literally have standing meetings with every single week. There's other companies of ours who I text with on a daily basis throughout the day, right? Like family, right? Like, they texting me something funny, I text them something, and sometimes it's work related, sometimes it's not. And then some of our companies, we have a more traditional relationship with, where it's like, you know, we meet every few months, we message each other online, they sent me a monthly update on how they're doing, you know, but different companies require different things. And so a venture studio was a good way of us going, we're not really a fund because we're like an operating company. And we have a different structure, and we're not an accelerator or an incubator. We're kind of both of those things, but neither of those things. So we just use that term to basically say we're a company that helps and works with and invests in other companies. And the fund, that's easy to explain because we all know of a bazillion funds and they all pretty much operate the same way. The only difference between our fund is that we kind of get special looks at the companies from the venture studio, because we got to live with them for the last year or 2 or 3 before making an investment. So, and that's a double-edged sword. It might mean that, you know, oh my gosh, David Blesnak, he's not doing so well anymore, and I know behind the scenes, and now I'm not going to invest. Or it could mean, holy crap, David Blesnak is onto something crazy and amazing. We're going to double down on his company and this company that he's participating with, or this DAO he's participating with, which is actually the case, right? If I didn't sit on the phone with David Blesnak on a weekly basis and hear about his company, I wouldn't have known firsthand what was coming together with Prime DAO, which is launching in a couple of weeks. And we wouldn't have been the only fund that invested in Prime DAO. You know, his other investors are found out about it first too, but they don't really know the details and all the stuff like we do, because we literally work with them on a daily basis. When they put out a press release, we're co-writing the press release with him and helping him distribute it and helping him get out there. So at least in our way we say it, and I'm talking way too much, venture studio is sort of that, right? Like, that's how we look at it. We're a part of the team. And, you know, it's getting tough right now. We're learning how to scale and change as things grow, because we're at about 20 portfolio companies now. And so, you know, you can't be on the phone every day with every portfolio company to get anything done. So we're learning how to manage that now with our small team and scale it. But it's growing organically, growing really well. Sometimes we might miss a deal or two because, you know, we have to focus on what we're working on. But it doesn't mean we're, you know, we're not efficient, right? You miss deals, and you also choose not to participate in deals all the time if you're an investor. Don't have a choice.
So it sounds like you guys take a very sort of like a pragmatic, but also sort of like a flow-based approach. That, you know, there needs to be like an element of like serendipity, and it's sort of like, you know, that it's that you kind of, you know, it when you see it, or like this kind of a mindset. But so you mentioned you have 20 portfolio companies already today, and each one of these is in crypto and blockchain, right?
Yeah,
and you kind of try to add strategic value. Have you seen any trends? Like, what do these companies need help with the most? And is there something unique to like to crypto startups that they sort of seem to need help with, like some specific areas?
you know, yeah. So for me, we try to focus on things that are in our sweet spot, right? So if we are trying to do a deal with a company, I have to sell myself to the company just as much as they have to sell themselves to me. I like the analogy of like when I had my own startup and I didn't have a budget yet, but I needed to hire an engineer. I would, once my CTO partner told me they wanted to hire somebody, I would take them out to lunch and I would pitch them harder than I would pitch the investors. Because my next thing I would do after lunch was send them their job offer, and they'd get a couple versions. They'd get a version with, here's if you take a lot of equity in our company and you get paid less cash. And here's if you take more cash and less equity. And I always would, of course, try to get them to take the equity because cash was so hard, and I wanted them incentivized. I wanted them to be a part of the team and really want to do good. And so, it was really important to me. Same kind of thing happens with startups. From our perspective, we don't do that kind of, well, sometimes in negotiation, actually, we kind of do, but I shouldn't pull the curtain that far back. But we usually will opt to give a little more cash and to still own more of a company if somebody negotiates with us. But anyway, the way we sort of do it, because we keep that in mind, we have to know we're adding value to the company. I've met 2 or 3 people in the last couple months that are in the healthcare space using blockchain for healthcare, and I know nothing about that space. And I feel like after the calls, I just met one of the smartest people I ever met, but I don't know how to help them. So I'd be doing them a disservice if we invested in them. I'm very confident in a lot of those people that they would have been really good investment opportunities if we were passive investors, but we're not. Maybe they'll be good for the fund at a certain point, but not for us in the venture studio, because I can't look at them in the eyes and say, if we do this deal together, I'm going to do this, I'm going to do this, I'm going to do this, and we're going to 10x this in the next 6 months. Or we're going to, we're going to blow this up. We're going to scale it, because I have no idea. Like I really don't know how to scale a business in the healthcare space. So that's part of the serendipity. It's not exactly serendipity. It's just finding the right fit, right? And then, and then it's going to what you said people need. I think that people think they need more than they actually do, because they're so hyper focused on their sort of wheelhouse. They don't realize that some of the things that we might be good at, or people around them might be good at, are something they should be doing themselves at the beginning, and something they just don't know. Like if you don't know an opportunity exists, you can't be at fault for not taking advantage of it, right? So a lot of the time, what we help people with is taking advantage of the opportunities that are right in front of them, that they aren't in the mindset or don't know that sort of that world like us. So we're like talking about growth hacking ideas and things like that. I think that people think a lot in the space that they need to hire a PR firm, or they need to do this, and if they just did this, it would help them get that, or they need to spend these marketing dollars. And there is no replacement to spending a lot of marketing dollars. There really isn't. But if you don't do it yourself first, if you don't understand how to do it, then that money is going to get wasted. And so it's like hiring a sales team before the CEO knows how to sell something himself, right? So if you if you are selling a product and the CEO can't sell it right, then you can't hire somebody who's going to miraculously find a way to sell it. You're the most passionate person about the project. You understand it immensely better than anybody else. And you know what? Some people might be an engineer and they might understand that they're not the best salesperson in the world, but they still have to be able to sell it themselves. Then a good sales team or a good sales leader could amplify it. So those are kind of things that we have to kind of coach a lot of companies up about, is the fact that they come to us going, we need to raise money because we need to hire this person. It's like, that person is not a magic bullet. That PR firm, I know a few PR firms in the space that are incredible, right? But you need to get to a certain point before they can amplify what you're doing. And so we help with that. Adam on our team, for example, I used to do this myself. Joseph used to do it with me. He would do certain types of the growth hacking and marketing, the automated stuff. I would do some of the more hands-on stuff, like contacting journalists and doing things like that. And we had to do it for ourselves. So we started doing it for our companies. We actually subscribe to services that PR firms spend tens of thousands of dollars a year subscribing to ourselves as a fund. And we do those services for our portfolio companies. Then we introduce them to the PR companies when they outgrow our team. And that kind of works. And then we coach them up about how to do a lot of it themselves. So that's something. And then you asked what the common thread amongst blockchain companies and what the trends they're looking at and things like that. I mean, I think we're coming to a bit of a head, right? Like DeFi blew up over Corona right now, or over quarantine and these Corona times. I think partly because things got accelerated and heated up because we're all working from home. And I think that that's what's happening. Same is happening with NFTs now. I think it's partly this we're all staying home. I actually had a talk with one of the founders of OpenSea the other day, and they said something that stuck into my head. They said, do you think we'd see this much growth in sales in NFTs if every time you bought an NFT, you had to connect to your actual fiat bank account to purchase the NFT? And absolutely not, we wouldn't, right? Because even though we know we could send our Ethereum or DAI or USDC or whatever we have, Bitcoin in our wallets to a centralized exchange and put money in our bank account, and sometimes we do that, right, as consumers, users, right? It still feels like funny money, like tokens, right? I'm thinking of like arcade tokens, right? Like Chuck E. Cheese or whatever you want to call it, when we deal with it. And, you know, I've spent money on NFTs, hundreds of dollars on an NFT that I just went like spur of the moment gut decision. But if I actually had to pull out cash or go to my bank and take money to do it, I would have never done it. I've never bought a piece of artwork for hundreds of dollars before. I've bought furniture for a lot of money before. I've bought things like that, right? But I've never did that before. But with NFTs, somehow I do. And maybe that's a cultural shift or whatever, but I see a lot of folks heading in those directions, right? NFTs, of course, DeFi, and then the unbundling of the banks and these DeFi products, I think are really the next sort of frontier. And the companies that were talking about that and dealing with it 2-3 years ago, I think are the ones that are really, you know, going to blow up over the next few months. But there's companies starting now, and it's not too late, that are doing interesting things. I think that taking what's being built in DeFi, taking what's being built in the NFT space and finding new use cases for them are going to be huge. So like, you know, just as a random example, DMM in our portfolio has created a really, really cool way, DeFi money market, to take real world assets, receive the proceeds digitally, so in an automated fashion, be able to then give the people on chain rewards, earn 6.25% interest by getting their product, right? And that product exists, and it's one of the most stable products in DeFi, earning 6.25% interest. And to build real usable financial services, you need a stable base, right? So as much as Compound or any of the others are awesome, and I love them, I can't go to my mom and say, hey, do you want to earn 12% interest? Oh, no, actually right now it's 1% interest. Oh, do you want to earn 7% interest? Oh, wait, now actually it's 3%. Every day it changes, right? And that's cool for us and the diehards and the nerds amongst us. But we're not going to be able to build real sort of financial products doing that. So I'm looking at things like DeFi money market as a base. What can be built on top of it, right? So we have one of our portfolio, or one of the concepts being built right now. It's actually not even a portfolio company. There's not even a token for it. Doesn't even fully exist yet. It's just a light paper on a website that we helped promote because we think it's awesome. Is Dr. Adel El-Miziri. He's he's a PhD. He's a researcher. He's written a lot of patents. He came up with an idea to use DeFi for social good. And he's basically created a page on dln.org where people can go to and help him write the light paper for this new concept behind social staking. And the idea is to essentially create free micro lending network for the world. DLN stands for Decentralized Lending Network. And the idea behind it is that imagine if people in the developing world could get free microloans, and the people who support them may not get as high of returns in other DeFi products, but will still actually earn a return. In this world where we're getting 0% interest from our bank accounts, we can still earn 2-3% interest and be helping people in the other side of the world, or people less fortunate than us, get microloans for 0% interest and 0 fees on the backbone of DeFi. That's crazy cool, right? Think about what's and then the innovations in NFTs. Imagine if those NFTs could be tied to real financial products. It's much easier and simpler to get an NFT. Think about the difference between holding a dollar versus explaining to someone how to stake a token, do this, do this, whatever. So imagine if NFTs could hold the keys to financial products. And now all of a sudden you're taking DeFi, you're making it more usable, you're making it more tradable, you're making it more fungible, you're making it more everything, right? And so I think that the combination of all these things, all these building blocks, right? People talk about DeFi Legos. It's happening now, right? Like I'm looking at a bunch of Legos here, so I'm in my son's room, but yeah, it's happening now, and it's really exciting.
Got it. And you mentioned earlier that you're kind of one of your sort of like strategies is betting on people, and or like one of your kind of like core pillars. Would you say that how does that work in crypto's case, where it seems to me that talent is a little bit more geographically distributed? That it's sort of normally, as you described, that the accelerator would be the let's set in a room for the next 2 months and jam it out. How do you do that in crypto's case?
So we never actually did that part of an accelerator ever. Joseph lives in Santa Monica. From where I live, that's only like 30 something miles, but in LA traffic and the way it is, it's like an hour to an hour and a half drive to go back and forth. So the way we used to always run our businesses together is that 1 or 2 days a week, he'd come up to me and hang out in my office. And 2 days a week or so, 1 or 2 days a week, I'd go to his. And so we never worked in the same room every single day together. It would be, 2-3 days a week together, 2-3 days a week apart, and working online. And we built the venture studio. The one thing we had in person was our conference, where people from around the world came, which that was sort of our like planting the flag and our magnet for deal flow, which was awesome because we get to meet people. We got to meet really cool company called Innovesta, who's based in Israel. We got to meet Total, who's based in Michigan. We got to meet Degens based in Canada. We actually never met Degens in person, and we made the investment. I still to this day, after we made the investment, I saw him for the first time. I saw Doug for the first time over Zoom. I just talked to him on the phone a bunch of times because we weren't using Zoom as often pre-COVID. We were just doing phone calls. And so, think about this. During the COVID time, it's been about 6 months now. March was when it started. I know, like, especially, I know this in particular because Adam on our team, his first day with us, we never were going to have him come in an office, but we were going to hang a couple days a week from us. He lives, 20 minutes away from me. Adam on our team's first day was the first day of lockdown in Los Angeles. And we never worked a day together in the office since he joined. And we've made probably 5 or 6 investments since then in companies, some of them new companies. I do calls with Prime DAO, and Cem, I think, is in Turkey. Patrick, I think, is in Germany. Joseph has spent a quarter of the time, or probably a third of the time, COVID times, in Austria. Adam's been out here in Los Angeles and in Miami. Like, everyone's around the world. So we're around the world. We're online all day long. You and I are talking across the world right now. You're in Singapore. Yeah. I'm in Southern California. And the sun's coming down for me. The sun's probably coming up for you. And that's crypto, right? I think that
exactly, completely.
What's interesting is we never did the in-person stuff in terms of working day to day, and that's serving us better in this time. But I don't know how anyone could go back to that. At least for us, it's been insanely more effective, even with the craziness of kids being home and doing school and all these things that are distractions, I don't think we as a group have been more productive ever, right? So, you know, as maddening as it can be sometimes when you just want to like hang out with your friend and grab a beer, you know, it's still amazing what we can do, right? Like we did the first close of the fund. We were going to delay it. We did delay it. We accelerated part of it, and we just went, you know what? We're not going to meet everybody in person. We're not going to meet anybody in person. We did the first close of the fund. We didn't meet one of the investors in person at all. We had a bunch of Zoom calls, and but think about this. If I wanted to, you know, one of our easiest people who we worked with for many years now, and who's an investor in us, and it's very public, is Tim Draper. When we go up to Silicon Valley and we go hang out with them, the fastest, you know, trip to Silicon Valley for us is a day trip where we drive an hour to a local airport, fly an hour there, drive an hour from that airport to the area where everyone is, spend the whole day, drive an hour, fly back, drive home, and it's like the craziest, longest day ever. But sometimes you have to go for a couple days or whatever. And you might get 3 or 4 good meetings out of it. If you get 2 good meetings, it's worth going for the day. When you're talking about raising money for companies, raising money for your fund and stuff like that. Now I can have those 3, 4, 5 meetings before I have lunch, and still be wearing, you know, I should have worn a nicer shirt, but still be wearing my sweat shorts and sitting at my computer, and that's it, right? Like, I wake up in the morning, I'm an early bird for the most part. And, you know, by 8 in the morning, almost every single day, I have a call with somebody, one of our portfolio companies, something, right? And by noon, I've met more people and gotten more done than I need to. Some days I have to block it so I can actually get shit done in terms of executing. But there's an opportunity here. And crypto startups should be the ones most ready to jump on that opportunity. The money is digital. The meetings are virtual, you know, everything there shouldn't be any reason why you have to meet in person, other than it's good for networking, it's good for team building. There is something still you get from the physical world, which we missed at our conference, but what we got was like close to 10x, probably with the replays of our conference, we probably got 10x the audience around the world, that people who wouldn't have been able to afford flying, people who wouldn't have been able to afford a hotel room, people who maybe didn't have the time to do it, whatever. But now we can actually get the word out. We can spread the word. We can do everything we want to do, get customers, do whatever needs to get done for whichever company, and do it, you know, in a way better fashion because it's virtual. So we got to take advantage of that stuff.
I completely agree. And like one of the things which I've seen myself is that this like COVID has kind of enabled or triggered, specifically in crypto, that I see this ability for, you know, that all it takes now, it's become so borderless that all it takes now is, you know, like you need this like a kind of crazy smart person anywhere with a great idea can get funded. They don't need to, you know, to be able to kind of to fly to a, you know, like a financial center and pitch to these funds. But I wanted to ask you, is this only unique to crypto, or is this actually kind of happening across the board, also like in the sort of in the valley?
It should happen across the board, and it's not just unique to crypto. Crypto people should be, you know, by nature more virtual and willing to sign docs or not virtually, right? Like things like that, right? Digitally. But like it's crazy. I wrote like papers about this 12 years ago because I was in I used the example of being in like a punk band in high school when I first started learning about social media or working at MySpace, right? So I went back a few. So when I was at MySpace, I was looking at what could happen via social media. I could be talking to people and becoming friends with people on the other side of the country, on the other side of the world. To this day, I have a friend who's in Florida who we crossed paths a couple times. We never met in person, but I've known them for like 20 years. And I think of them as like a pretty good buddy, right? Like, and if I met him in person, I give him a huge hug and it'd be like weird because I never met him in person. But I met this person 20 years ago on the internet, right? And that's not that wasn't normal back then, but it's perfectly normal now. Like, how many friends do we have from Twitter or from the crypto community that we maybe never met in person? And so, you know,
I got like 10 colleagues I've never met, but you know, you worked on a daily basis.
Yeah, exactly. So like, I use the punk analogy because at my school, there were like literally 10 kids that were into this kind of music, right? And we're like the misfits and the weirdos, the kids with the mohawks and the things and the whatever, right? And so there was like 10 of us. But then you get to be 16 years old, at least here in the United States, and you get a driver's license. And all of a sudden, your 10 people at your high school could meet with the other people at the other local high schools, and the group turned to be like 30, 40, 50 people. Then when you graduate high school and you're old enough to really branch out, you can start going to punk shows and different things and sneaking out. And all of a sudden the community grows to a few hundred people because you're in a certain area. In Southern California, we were lucky. There was a few thousand people because there was a big community of those people. But then all of a sudden, websites started becoming more of a thing. And then MySpace became a thing at a certain point. And all of a sudden, a punk band in Southern California could have 1,000 fans in Singapore. Right? You know, in Singapore, there was a huge punk community actually, because at the time, Singapore was really, really strict and crazy, right? And
really,
if you think about Singapore 15 years ago. And so, you know, like so all of a sudden a punk band that was like 3 kids in a garage in anywhere in the world could post an MP3 on MySpace and get thousands of people to listen to it. That was like mind blowing, right? And what that showed me as a young kid who was constantly told, why are you doing that weird thing that nobody likes? You realize like, oh, those weird things that nobody likes, or that weird things that only you like, if you like it, you will find thousands of people on the internet that like it too. If you have an idea, even if you think it's small, like maybe you couldn't go into your local mall and sell it to 100 people because like 90 of those 100 people wouldn't even understand it, right? Or it's just weird because it's like, who likes that, right? Or whatever. You can now find everyone in the world. You now have distribution globally. And so in my mind, there was never, like, in my mind, what's happening today, digitally and virtually and stuff, should have happened like 15 years ago. But, you know, it takes time for these cycles to occur, but it's happening faster now more than ever. It took years for Amazon to go from books to movies, then to everything else, right? But now it would be crazy to launch a business that doesn't start with selling online, you know? And so all of this stuff is accelerating at a crazy fast pace. And if you're a good entrepreneur, getting back to your actual question, if you're a good entrepreneur, it doesn't freaking matter where you are in the world. You can be in Africa, you can be in Singapore, you can be in Israel, you can be in Egypt, you can be in anywhere in the world, South America, and you can find people who are interested in your product on the internet. And when the goods are virtual, when the marketing is global, and when regulators can't stop you from transacting, you now did create a global world, a global ecosystem and economy. And so, you know, you don't have to go through customs when you send something to your customer in another country. You don't even have to send anything. Like it's just as easy for me to do a transaction with you in Singapore as it is for me to do with my neighbor downstairs. Like I could be literally paying the rent on an apartment where the landlord lives in the same apartment building, or sending that same amount of money to someone across the world, and it takes the same amount of time, same transaction, same everything. And you know, that's what's really, really mind-blowing here. So we have no geographical boundaries. Because we're in the United States, and because we are do everything by the book, and we have a proper fund and things like that, we might get slowed down or stopped from doing certain things with certain countries and stuff like that. But in general, like we have no boundaries whatsoever for the fund, other than if we believe that the people are doing good and if we love the people, you know. So, you know, anywhere you are in the world, like I said, every one of our portfolio companies, you know, the ones we just made a bet on a company that's based in Los Angeles. in the last 6 months, I haven't met that person in person, haven't met that person in person. And we made a bet on Prime DAO, for example, and they have a global community around the world. And we've met with them just as much as we've met with the people in Los Angeles, and it doesn't matter, right? It's starting to get dark.
I guess 5 years ago, or even 5 years ago, this would have seemed quite weird. But I know you're super busy and we're kind of running out of time here, but I'd be really interested to sort of to hear what would your advice be to today to aspiring entrepreneurs in the blockchain or crypto space? And obviously, when should they get in touch with you?
You should get in touch with us yesterday. You should, so look, I always say it's never too early, but maybe it can be too early. But I want to meet everyone when they're coming up with ideas. I'll have a half-hour conversation with somebody and give them my opinion and help any way that I can, even if we're not working with them. And, the reason is because I know that if you're working on something today and we don't get to work on it together, you'll be working on something new tomorrow or whatever. And it's a long game. This is a long game, but don't let the fact that it's a long game slow you down. Don't overthink things. Don't, something that crypto companies do that is really, really amazing on one hand, but hurts them on the other hand, is writing these super long white papers and things like that. When you're building a protocol that can't easily be redesigned and rebuilt and things like that, makes sense, right? But when you're doing a startup, what you think you're going to build and what you actually build is almost never the same thing. So too much documentation and overthinking things slows people down. So I'm always constantly telling people the advice that I need, which is focus and get shit done. Just focus, get shit done, keep executing, because one, we can, right? Don't be stupid and irresponsible with DeFi stuff and, the meme is test in production. You should test in production, but just do it responsibly. And people who are participating even more so need to be responsible. But in general, get shit done, get shit out there, test it, show it to me. How can I help? And if I can help, then I will. Regardless if I work with you, I have a decent following on Twitter and I hang out with a lot of people online, and half the companies are not our portfolio companies, and I still support them and do stuff with them because I'm a part of the community and I love it just as much as everyone else. And so, for me, the most important thing is to execute and get shit done, because the worst thing somebody can do is constantly tell me about the things that they're going to do and never show me anything that they did. I want you to say, hey, next month I'm going to launch this thing, and then next month show it to me. And they go, oh, crap, that's cool. And then you could even tell me, oh, it sucks. It doesn't work the way I thought it would because of whatever. Next time we're going to do it this way, or we're fixing this. But I want to see that you did something. Like it's impossible for me to help somebody. Like even after we work with a company, the only thing we can do is amplify what they do. I'm not the one running the company. I'm not the one building the product. So if you build something, I can show it to more people. I can try to help get customers, or I can give you some feedback. I can build on top of it even, like I used Total as an example earlier. I built a WordPress plugin to launch your own decks on top of their software. Actually at the beginning of Corona time, it's been 4 or 5 months now. That Dex now lives on 500 different websites on the internet. And I built that myself but if they didn't build the product to make that so easy for me, I would have never done it. So, it's really important for people to build, especially when you're pitching to people. I want to know, even if it's not going to be beautiful, it's not going to be what you envision, 10 years from now. But if you can't get shit done on your own as a 2-person team, you're not going to be able to BS me and say, if I only have a team, I'll be able to do this. Because I was that hacker who isn't a full engineer, who doesn't really know how to completely build something from scratch or write my own Solidity contracts or anything like that. And I've always figured out how to get a first version of my company launched without being that person. So you show me how you can do it too. and then I'll show you all the mistakes I made along the way. I'll try to help you navigate that. But that's the number one, biggest advice I can give people is, be a factory, not a warehouse. Like build, get shit out there.
That's very well put. Thank you so much for your time. And once again, so Alon Goren from Draper Goren Holm, and I wish you all the best. And obviously, keep rocking that Corona beard.
Thank you. No, I think I'll go full, like, I'm gonna be crypto stash for Halloween. Don't tell them until Halloween. And then I'm completely shaving it off, and it'll be fun. But thank you for having me. Congratulations on this killer conference. I think you guys are the biggest education conference in the world now, I saw. So rock.
Well, we try our best.
Hey, well, anybody who's interested, go to drapergorenholm.com. Happy to check out what you're building. And hit me up on like Twitter and wherever. Let's have some fun.
Thank you, Alon.
Hey, thank you so much, man. I appreciate it. This was cool.